Hey everyone, this is Arjun Vijay from AlphaStreet. Today joining us is Kontrol Technology CEO Paul Ghezzi. Good morning, Paul. It's good to finally meet you.
Hey, how are you?
I'm great. How are you?
I'm good, thank you.
Paul, let's jump right into BioCloud. Tell us a bit about the technology, your distribution model, and how it's different from any alternate existing products.
Sure. So BioCloud exists as part of Kontrol Technologies, which is the Canadian public company. And BioCloud is innovation within our air quality group. So at Kontrol Technologies, we tackle energy efficiency, emissions, and BioCloud is the latest innovation. So what BioCloud is really is air quality monitor that's looking for viruses and pathogens in real time. So we understand that technology already exists at a lab level. So for example, if we went to a lab and we said we're looking for a virus or a pathogen, there's a technique called the modified Western blot, which is a well-established scientific technique. We've taken that process essentially and automated it and patented that automation into what we call BioCloud. So BioCloud will exist in a room or a space as a defined area, constantly sample the air and looking for early detection. So to be clear, it's not a medical device, it's an air quality technology. And we've taken the approach initially that we were going to build our entire distribution network. We've since pivoted to targeting large established global organizations that already have those networks. So for example, we have approximately 20 distributors, direct distributors. We've just brought on Steelcase through an exclusive partnership. So Steelcase trades on the NYSE, or $3 billion revenue company. They have 800 distributors. And so as an example of how we've pivoted there through learning and experience, we're also targeting other organizations of that size and scale. And we think that allows us to focus on the technology, the software, the hardware, and our partners focus on the larger distribution.
All right. Paul, all that sounds good. I think one aspect about the technology that investors might be eager to know about would be its relevance. Once we move past the COVID crisis, how would you address that?
It's really interesting. So prior to COVID, no one was really thinking about this. Air quality was kind of the poor cousin in building automation. And that's just, it's the nature of how life works. So in comes this pandemic. And really, initially, it was, we don't know how this spreads. And now we have the science around spread is much better. So we know, for example, indoors, it can spread 18 times faster than outdoors, especially if it's in a poorly ventilated or poor air quality area. So if we think about the current pandemic, it's really about, do I feel comfortable going back to the space that I used to go to, my office, my church, any building that has what we call a defined zone where people are congregating. But beyond this pandemic, let's think about what is the next pandemic? What's the next thing we have to be worried about? And the principle behind BioCloud is it's built to have approximately a 15-year life through the hardware and the software. And we have what we call a replaceable detection chamber. And that detection chamber is specific to a certain virus or pathogen. So that detection chamber can be switched to something else. So of course, right now, COVID is the primary concern, but what is the next concern? And so, when you build a business, it's a little different than thinking about the stock, right? So when you build a business, you're always thinking 5, 10, 15 years. It's probably as far as you can go. And then you think, what am I building today? And how does this apply for tomorrow? So never did we take the position that this was, a COVID analyzer. It's only for today. And when COVID's gone, BioCloud has no application. In fact, it's the total opposite. We see many applications and we don't know what the next pandemic's going to be. So I think it's kind of a future-proof technology for air quality, early viral detection and pathogen monitoring.
Hopefully we don't see another pandemic like COVID. So,
well, I want to agree with you, but who knows what's coming. And I think, from our perspective, extra technology being ready and having safe spaces, I don't think is going away anytime soon.
Definitely. Let's move on to your recent acquisition. How does the acquisition of Global HVAC sync with your existing technology?
Sure. So, when we started our journey in August 2016 as a public company, we had $1 million of revenue. We've put an outlook into the market this year that says we're going to do about 38 million of revenue. So our growth has been fantastic. Global adds to that growth. And it helps us accelerate to that 100 million of revenue run rate, which we're really working hard to get to. So when we look at the overall platform, really what we define as a customer is any building over 40,000 square feet. And all those buildings have the same challenges, maybe in different forms, but energy consumption and demand is a big challenge. Sustainability is a big challenge. Emissions is a challenge. And then air quality. So any company that fits into our portfolio that can help us solve those challenges, we look at strategic acquisitions. We do acquisitions a little differently here. We're value buyers. So when we look at an acquisition, we're typically buying at 4 to 5 times EBITDA. And we're looking to see if we can scale the business and create synergies within our operating platform. So Global is a project business with high revenue and a very low service business model. And we can interject our service business into Global, create those cross synergies. And I think it's a very exciting opportunity to scale the revenue and also add new revenues as we grow.
And how do you plan to fund your future acquisitions?
So we've been very strategic in the way we raise capital. Every public company has to raise capital or else why go public? But we've been very careful to use a good combination of debt and equity. So right now we have 47 million basic shares outstanding. It's a very tight structure. Management owns almost 30% of that, or slightly around 30%. We have about 7 million of debt, relative to our equity. It's a low debt position. So we have a lot of levers we can pull. But what we've essentially determined to be the case is we don't buy technology. We buy cash flows and customers. We innovate technology in-house. It allows us to keep the valuations down when we make an acquisition. It also allows us to properly capitalize and fund the business, because if you can raise capital that's accretive, put a great acquisition on the books, over time, the common share the valuation should respond to that approach. And I think it's been good for us.
All right. Coming to your financials, you're generating consistent revenues. Importantly, you're starting to see recurring revenues. What's your timeline to hit consistent annual profits?
Yeah, so we define, when you're scaling a small cap, we don't look at net income as the measure of success. What we look at is, fundamentally, can we grow the business aggressively, which we've been doing? Can we remain EBITDA positive? And can we, operate on a cash flow positive, but not be a huge cash flow generator because we're reinvesting in our business? And I think we're very comfortable with that model. Other companies take the approach, and I'm not saying this is right or wrong, but other companies say we're going to grow our revenue. We're going to lose a lot of money for 5 or 10 years. We're going to fund those losses. But as long as we're growing, it's fine. I've never been comfortable with that, because if you're funding your losses at some point, if the market, has a meltdown and you're stuck in that raising capital, it's very difficult. So we like to have financial discipline in the business, focus on revenue growth, EBITDA positive, manage our cash flow. Net income will come over time. So, when you're a public company, the things that can go against you on net income are when you're using stock options to reward employees for performance. Those are all things that, create negative net income. And so that's not really where we focus. I think EBITDA is a good measure of health if you're generating a cash flow from the business, and we are today. So we're very comfortable with that position.
Understood. So this is basically a period of scaling up the business for you guys.
Definitely. I mean, the other thing about being public is, quite honestly, if you're not growing, no one's interested. And I think, so you have to look at it like this. Of course, we all want to grow our business. You want to do it with financial discipline. And if you're going to grow your business, you need the capital markets with you. And again, or else why be public? So I think scaling is very important to us because, we want to dominate our industry. But I think scaling also plays into having a good capital markets support system, because if you're growing and executing, typically the market is with you.
Makes sense. Lastly, Paul, I'm just curious to know what's on the card for Kontrol management over the next 2 years.
So we're super bullish on the business. I think the industry we operate in is really interesting on many levels. So buildings are going to consume half the world's energy in the next 10 years. If you think about that, it's an amazing statistic, right? The other part of that is buildings contribute to about 40% of greenhouse gas emissions, and buildings aren't going away. So when we think about buildings as an ecosystem, what we're essentially providing is a solution to all the challenges that buildings face. And so we believe that we're in a high growth period. of our growth phase as a company, and we want to execute on synergies, on acquisitions, the expansion of BioCloud, innovating new technology. We've recently announced that we're developing a carbon credit platform for building owners and asset managers. So we'll be announcing that shortly, how to better monetize carbon credits when you make an efficiency improvement. So I think it's just really an exciting time to be in this part of the global economy, which is really tied to energy and tied to climate change and greenhouse gas emissions, which those are topics we discuss every day and discussed every day in the news. And we're coming at it from the building side and the technology side.
Wonderful. I'll just wrap up with that, Paul. Thanks again for your time.
Okay, thank you.